Hello, everyone. Thank you for joining MAGNiTT's first ever forecast webinar. The presentation will be followed by a demo by MAGNiTT's very own Hammer Bilbil from our account management team on how MAGNiTT's platform can help you replicate this for any region you have or you prefer of choice. I'm always happy to have you here. So as we've been sharing over the past few weeks, we released our MENA forecast report. Omar from the marketing team will be sharing the link to the report shortly. So, yes, the webinar is going to be recorded and shared later. All right. Okay, I'm sorry for the delay. Okay, to start with, so the events happening in the world at the political, macroeconomic, and even natural level are unpredictable. We've been seeing random earthquakes. We've been seeing natural disasters ongoing in the world. So whatever is happening, if we can predict the macroeconomics, we cannot predict nature. And this does impact the ecosystem at different levels. And currently, I'm at no point of being a future forecaster, but in the coming presentation, we tried as much as possible to incorporate the good and the bad to nearly account for both sides of the spectrum. Before I move forward to the forecast scenarios and assumptions, 2023 did not seem to be the best year for VC funding in the MENA region yet, following two record-breaking years. So while 2021 and 2022 were like super performing for the region, the residues of non-mega funding and number of deals have been seeing quarter-on-quarter declines since the beginning of the year, with Q2 reporting the lowest funding in the region since Q3 2020 and the lowest deals since Q2 2017. This being said, the past weeks have been seeing like a buzz at the level of fund announcements, with SEC's announcement of investment of $5 million in a fintech fund managed by Venture Souk, and which will be mainly backing early stage fintech startups, as well as Impact 46 announcing that they are starting the deployment of the capital of the Fund 3, announced earlier in February, of Saudi Riyal 500 million. However, this is a bit of a forward looking. So the presentation will cover MENA forecast scenarios and the same scenarios for both UAE and Saudi Arabia. To look at the components so you can understand this better, this is divided into two components. The non-mega funding, which we're distinguishing non-mega funding, which are scenarios based on non-mega deal funding due to the large number of transactions. So this is a bit predictable based on historical data, and the mega deal funding. So we're going to have 5 scenarios that forecast non-mega funding and a final approach towards mega funding, which is a bit spontaneous, unpredictable, erratic, and is a bit like nothing we can predict moving forward. Okay, so is MENA going to the better or to the worse? As I mentioned earlier, there are 7 scenarios here, but one of the scenarios, so one approach using MAGNiTT's platform incorporates 3 of these scenarios. First of all, let me start with the doubling H1 2023. So as we mentioned earlier, 2023 is not yet the best year for venture capital. H1 already incorporated 549 million. So the first approach was automatically taking the parallelism between H1 and H2. Q1 is ideally and usually the best performing quarter for the MENA region. Q4 usually is better performing in terms of the rebound following the summer months. So we try to incorporate a certain level of parallelism, Q1 to Q4 and Q2 to Q3. Why Q2 to Q3 this year? Because Q2 incorporated this year the 2 Eids, Ramadan, and the Adha and the Fitr and the Ramadan impact. So so moving in parallel, capital deployed is estimated to reach 1,098 million over 392 deals in 2023 due to the parallelism I already discussed earlier. And this is expected to show us a funding decline of 52% year on year in 2023. Okay, my voice is echoing. Is this better now? Please let me know if my voice is better now. Okay, perfect. So in a nutshell, on doubling H1 2023, first half had a 549 million in non-mega deal funding. Due to the parallelism, we multiplied by 2, and we're expecting a $1,098 million in $1,098 exactly million in for full year 2023. The second scenario was a bit of a contribution factor of H2. So we tried to calculate across 2019, 20, 21, 22, how much does H2 contribute to the total funding of the year. And moving forward, Amr will be showing you how this can be extracted from MAGNiTT's platform. And as we can see, that H1 is ideally the biggest contributor to the funding share in the MENA region. So as per this, we calculated the average of H1 contribution, which was 56%. We projected it on the funding that is already there in H1 to get the whole image, which is expected to which pushes MENA funding to stand at 983 million. So this scenario incorporates the half-yearly performance in the MENA region. Typically, H1 is capturing the highest share of funding, as Q1 is usually, as I mentioned earlier, the top-performing quarter, applied to the past 4 years in the MENA region, with the exception of 2021. And as I will mention moving forward in the presentation, 2021 is a bit of a tricky year because it incorporates, in the first half was still the recovery from COVID. Its second half was a bit of a better performing half due to the reboost in the market following the loosening of the COVID measures. So taking into account the changes in this scenario, we are expected to see funding decline at a 57% compared to 2022. This is so as we believe the 2023 could have a certain type of parallelism with the low vibe of 2020. So the COVID 2020 funding cycle was one of the assumptions we took to look into how we forecast 2023 moving forward. So the COVID era imposed a wait-and-see approach, similar to something to the vibe we're seeing currently due to the monetary tightening, tighter liquidity, cautious investor sentiment. So taking into account this, as we can see on the chart in front of us, we kept Q1 and Q2 as they are, but we tried to make a certain parallelism between the Q3 quarter-on-quarter decline seen in 2020 and the Q4 quarter-on-quarter variation seen in 2020. And interestingly, funding will be estimated to stand at 775 million in 2023. So this scenario considers the PSC funding during COVID, and hence we're expected to see a 66% year-on-year decline in 2023 if the funding model persists. Again, this incorporates scenarios 4, 5, and 6, and this is for me, one of the most interesting tools on MAGNiTT's platform, the seasonality analysis. So capital deployed is estimated as per the first scenario, which is the seasonality analysis scenario, which I'm going to explain moving forward, to stand at 916 million. How did we get to this? So as we look on this chart tries to, calculates the quarter-on-quarter variation in funding between, for example, Q1 2019 and Q4 2018. So what we tried to account for here is an average of the variation across Q3, So we tried to calculate we calculated the variation across Q3 quarter on quarter, which is a minus 35% for Q3, and we tried to do the same thing for Q4. So this yielded us to get a total of funding at 916 million based on this like comparative analysis between what we've been seeing earlier and what we see now. The interesting thing I want to highlight is that if you reach out for this on the platform, there's a certain number that you are going to find for Q3 2023. And this is an estimate of whatever data we have year to date based on the previous quarter. So it's a year to date comparison. It's not accurate for Q3 in total because we still do not have the whole thing yet, but it's a measure that gives you a hint of how things are going to move forward in Q3. However, based on history, this seasonal funding analysis can also, based on the history we chose. So if you choose to look, for example, at a 10-year historic data, this is also available. So, but we chose here to look at the past like 5 years. And if we look at the past 5 years for a best case scenario in this, for the MENA region, we can see that the best quarter on quarter variations were in Q3 2018, which is a plus 3% for Q3 and a plus 316% for Q4. Incorporating them into the data we have for 2023, the best case scenario for this year is a $1.1 billion or a $1,125 million based on whatever we have till now. For the worst case scenario, however, we took the minus 68%, which is the worst variation across 2018 to 2022, and the worst variation is a positive for Q4, and it's a plus 36%. And however, funding is expected as per these variations to stand at 683 million by year end. On a good note, and it's something, it's like a highlight to share, data available on the platform to date reveals that non-mega funding in the MENA region already surpassed the worst case scenario and is already above 700 million. So the worst case scenario, based on the data we have for the past 5 years, is already out of question. Data on the good side of things is beyond what was for us the worst case scenario to date. We also, on our last scenario for non-mega deal funding, tried to incorporate. Okay, sure. The last scenario incorporates the global trends. So what we tried to do in this case is mirroring the performance of the global venture capital space between H1 2023 and H1 2022. So we collected the data. We actually took the data from CB Insights Global report. We tried to calculate the difference between the total funding for H1 2022 and H1 2023, which reported a 52% decline year-on-year in funding. And we projected the same thing on the MENA region. This allowed us to calculate funding to sum up to $1,093 million in 2023, and which allows us to expect that H2 2023 will deliver a total of $544 million of capital deployed. This is, so I'm just going to recap the scenarios because we're going to see them moving forward. So our first one was doubling H1 of 2023. Our second one was trying to incorporate the percentage H2 usually has in the total funding. The third one was trying to adopt a COVID-like scenario. The 4, 5, 6 were using seasonality analysis, whether the average or the best case and the worst case scenarios. And our last one was the comparative to the global trend. I will now move to the mega deal impact. The problem with mega deals, as I mentioned earlier, they could be event-based, they could be very random, very erratic. So forecasting their impact can be a little bit tricky. So in this scenario, we forecast the value of mega deals based on the previous 5 years again. So what we tried to do was calculate the average size of a mega deal based on our 5-year data. And we tried to take a best case for the year. So based on the past 5-year data, an average mega deal in the MENA region accounts for a $169 million. What we tried to do is take into account what H1 gave us. So H1 so far gave us $549 million. The best year in terms of mega deals was 2022, which saw mega deals peak at 7. So we tried to parallel this, to make this in parallel with 2023, and say that a maximum of 7 mega deals are going to be closed in 2023. However, it could be like a minimum of the 3 deals that were already closed in H1. So moving forward into H2, we can see 0 mega deals, or at the best case scenario, as per our assumptions, we can see 4 mega deals. The way we try to calculate the total funding of expected mega deals is based on the $169 million that we calculated based on the 5-year average. So in brief, this chart incorporates the multiple scenarios. So as we mentioned earlier, worst case to best case, dropping worst case because we're performing better at least. And so basically the range is going to be between 775, which is the COVID cycle, and 1.1 billion, which is the best case scenario based on what we defined as the best case scenario. So 2023 non-mega deal funding, in brief, could decline to levels it had not seen since 2018. But again, we still hope for improvement in performance moving forward post the summer slowdown, moving forward into GITEX and the other events that are coming out towards year end. All right, so we currently will replicate those scenarios into UAE and KSA. So moving to UAE, which also saw the lowest funding since Q2 2023, lowest funding in Q2 2023 since Q3 2019, we impose similar scenarios. So the doubling H1 2023, we had $245 million in funding closed in H1 2023, multiplying this by 2 again because there's the same level of parallelism we see in the MENA region. We expect funding in the UAE to reach $490 million, which is nearly $500 million in funding, which reflects a 43% year-on-year decline from 2022. As I will be mentioning this earlier, but this is again strictly for non-mega deal funding. The H2 percentage annual contribution forecasted 2023 funding to stand at $438 million. So again, H1 for the UAE captures a 56% share. Q1 is ideally a strong performing quarter for the country. So we expect that H2 on average contributes to 44% of the total funding. Based on this calculation and based on the data extracted from the MAGNiTT platform, the percentage annual contribution scenario puts funding in UAE at $438 million. Again, the COVID 2020 cycle implied on the UAE model tells us that the pandemic, similar to what we're seeing now, pushed towards a more cautious investor appetite. Taking into account the quarter-on-quarter changes seen in COVID for UAE, we can see that there was a quarter-on-quarter decline in Q3 of 31%. However, Q4, as we mentioned, is usually the rebound of the summer performance, so a 0% change. So it was not negative, but at least it was stable. Hence, based on this model, funding in the UAE is expected to stand at $351 million, down by 59% from what we saw in 2022. Seasonality analysis, best case, worst case, we can see that the average decline, quarter-on-quarter decline for Q3 is 24%. The average increase for Q4, the average variation, but the most common thing is that we ideally see a quarter-on-quarter decline in Q3 and a positive performance in Q4. So based on this model, funding as per the seasonality analysis is expected to stand at 402 million, down by 53% year on year. Again, best case scenario for Q3 is 1%, excuse me, is 1% for Q3, it's 164% for Q4. So as per the best case scenario for the UAE, it's expected to surpass the $500 million mark and stand at 528 million. However, still down by 39% when compared to the total non-mega deal funding seen in 2022. The worst case scenario for the UAE is a minus 36% for Q3 and a 0% for Q4, and is expected to put funding at $344 million, which is down by 60% year on year for the Emirates. Again, global trends for UAE are expected to show us a 52% decline, because we're mirroring what we saw globally, and hence the total is going to be $413 million for the whole year. So H2 should contribute by an additional $168 million of capital deployed if we wanted to see a similar performance. At the level of mega deals, and an event that has not been common for the UAE for the past 5 years at least, the country has not seen yet any mega deal to date. So what we expect as a worst case scenario is that this will continue moving forward towards end of year. However, what we hope for is that the venture capital space in the UAE will see the maximum that it has seen over the past years, which is the 2, calculated based on the average $208 million, which is the average. So the total mega deal funding divided by the total deals, which is at $208 million. So according to this calculation, we're expected to see a 417 million contribution in mega funding in 2023. Again, this is the summary of the scenarios. If you would like to take a hint on the performance, the range is expected to be between 344 and 528. But in its worst cases, funding could non-mega deal funding could decline by up to 60% this year. KSA is the new funding approach turning the tables. So as new deployment of funds takes place, is this going to change what we've been seeing? So again, the VC space in the kingdom started the year on a strong note with the announcement of mega deals. However, non-mega deal funding was slower in Q2 2023 due to the different events taking place. However, again, it was the slowest since 2020. Similar scenarios, starting with the first, doubling H1 2023, we already saw a $162 million in non-mega deal funding in H1 2023. Doubling that up, we're going to see a $324 million by end of year. This does not, again, incorporate the mega deals we saw earlier. So in terms of non-mega deal funding, if this scenario persists, we're going to see a 50% year-on-year decline in the kingdom's non-mega deal funding. An annual contribution, you currently know better how this is calculated. Again, with the exception of 2021, H1 is the best performing for the kingdom. Taking this scenario into account, funding is expected to stand at $258 million based on this scenario, and driving down the total funding by 60%. I will keep this here. I will not discuss it forward because, again, in a sneak peek into year-to-date data, whereby non-mega deal funding in the kingdom already crossed COVID 2020 levels. So the 200 million mark is already crossed in the kingdom. But however, if we mimic a COVID scenario, funding is going to decline, would decline by 71% and stand at 188 million. A similar seasonality analysis at the level of the kingdom will show us that Q3 is going to see a 46% decline. However, Q4 is going to see a 309% quarter-on-quarter improvement. So talking about this funding, as per this 5-year seasonality analysis, is expected to stand at $258 million, down by 60%. And the best case scenario is going to be a 15% quarter-on-quarter rise for Q3 and the 941 quarter-on-quarter increase for Q4, which puts funding at $621 million for the kingdom. However, the worst case scenario, which is again out of our question, is expected to see a minus 88% for Q3 and the plus 8% for Q4, and put funding at $185 million. But again, for the good sake of the venture capital space in the kingdom, both the COVID scenario and the worst case scenario no longer apply to date. Global trends put funding at $319 million, which is which will allow the which pushes the kingdom to gather a $157 million in H2 in order to be like replicating the global trends scenario we already discussed. As for the mega deal funding, again, mega deal funding was the hype of the mega deal funding in KSA was the best news for the venture capital space in KSA and in the MENA region starting this year. However, if we want to look at the worst case scenario for mega deal funding, we can see a 0 in H2. However, we can also, if we wanted to take the best case scenario, which is 3 mega deals for the kingdom, we can look at the one additional mega deal accounted at an average of 124 million, which is the average of average value of mega deals we've seen over the past 3 years, at least the years we were seeing a mega deal in the kingdom. Again, incorporating the whole scenarios, we can see that we have a range between 185 and 621, dropping the scenarios that no longer apply. We expect that funding in the kingdom is going to range between 258 and $621 million in the best cases to date. Again, I'm going to leave this here and move forward. This is actually the scenario recap and a call to action on how MAGNiTT's platform can help you. Amir from account management is going to be joining us now, if no one has any question to me, to share with us how you can perform this. How can MAGNiTT's platform help you? I think this is a very simple approach. You can apply this to countries, to geographies, to different periods. We, moving forward, are going to do the same exercise for Q4 for different countries and geographies. So drop us a note if you would like to see any period of time, any country, any geography, or any region of interest, and we can take this moving forward. And you can always reach out to our sales team to get further insight on our reports and on the platform. Off to you, Amir.
All right. Thank you, Farah. Can everyone hear me? All good? I'm assuming yes.
Yes, we can hear you.
All right. Any questions to Farah before we share my screen and go over? I'll just give it 1 minute. And if you guys don't have any questions now, once we finish the demo, you can still ask questions. I'll just hand it over to Farah after I finish the demo. So since Farah deep dived into KSA and UAE, I will be deep diving into Egypt, just showing you a few examples of how to replicate the data she gave us, how to um, show some of the charts, show some of the graphs, and take it from there. So yeah, I'm just setting up everything. If you guys can give me just 1 minute, and then we can take it from there. All right, can you see my screen?
Yes, Amir, all good.
Perfect. So we use the market sizing tool, which is under the analytics. And the first example I want to show you is the doubling for Egypt. So I went on the market sizing funding evolution. I clicked Egypt. As Farah mentioned multiple times, all the analysis was done without any mega round deals. So you can go to the amount category, you can unclick mega deal. And the doubling exercise was done by taking the assumption that Q1 is similar to Q4 and Q2 similar to Q3. So we used 2023. I clicked on Q1 and Q2. I clicked apply, and you get the data for Egypt Q1 and Q2. So if you click on, let me just do that again for you. If you click on 2023, you remove mega deals, and you click on Egypt. You can do this with any of the countries that we cover. You can pinpoint specific industries if you want to deep dive into different industry forecasts. So I did Egypt, all industries, Q1, Q2 in 2023, 53 million. So if you assume that's H1, if you double it into H2, you'll get the forecast for 2023 in Egypt. The second example that I want to show you is the percent annual contribution. So similar thing applies. However, we show data from 2019 to 2023. Again, Egypt, no mega deals, all industries. And what we do first is we get the Q1, H1 data. So you get the Q1, Q2, you get this data recorded, and then we get Q3, Q4 data. So you have H1 and H2. Let me just unselect 2023. So you get Q1, Q2 for 2019 to 2022, and then you get Q3, Q4 for 2019 to 2022. You find the percent shares of each, and you get the forecast. So that's for H2 percent annual contribution scenario. For the seasonality, which Farah enjoyed talking about, we click on the seasonal functional growth. And the very interesting thing about the analytics tool is all the different filters that you have. So this is just one of the dashboards that we have. We can dig deep into valuation estimates under deal size analysis. You can benchmark funding Egypt versus UAE in the forecast. So there's a lot of different combinations. We are just keeping it very high level for the sake of the demo, but you can deep dive into any of the different scenarios, combinations you prefer. So going back to the seasonality, I picked Egypt, and I picked the 2019 to 2023. And the Farah's presentation did not include Q3, so we included that. And then we can go through the scenarios that she mentioned. So for COVID scenarios, we used Q3, Q4 of 2020, and we applied that. So obviously for Egypt, we beat Q3 of COVID scenario. For the seasonality analysis, we take Q3, Q4 from let me get 2018 back over here, 2018 to 2022. So we find the average and projected. For the best case scenario, we take 29%, and we take 249%, and we project it. And for the worst case scenario, we take 77%, and we take 48%, and we project it. So that is, in a nutshell, how you can get the first three scenarios. The final scenario, which is the most random and erratic scenario, is the mega deals. So if we go back to the funding evolution, and we click, if you realize the very cool feature of the analytics is if you go through the different tabs, the same filters apply. So I don't have to put Egypt again. I don't have to put the countries again. So if you unselect this and select mega deals, unfortunately, Egypt doesn't have a lot of mega deals from 2018 to 2022. But for the case of other geographies, they might have some. So what we can do is we can click on the mega deals throughout the whole years, and then we can use that data to extrapolate and find the answer. So if you want to do it, that way, you can do it. However, as Farah mentioned, mega deal evolution is very random and erratic. It's very case by case situation. It's not one of the metrics we use to forecast or to come up with any analysis, and it depends on the assumptions you take. So that was a quick demo of the different scenarios that Farah went over. I just wanted to show you a different aspect of it, different point of view. If you have any interest in the analytics tool, if some of our clients already have access to it, you can view it. You can deep dive into the other dashboards as well. And that is it from my side. If there are no questions for me regarding the platform, I'll hand it over to Farah. As always, please reach out to us, Amir or Farah or anyone from the team if you want to learn more. And yes, that's it from my side. Over to you, Farah.
Again, thank you everyone for attending. I hope this was insightful and beneficial moving forward. Please suggest if you have any regions, countries of preference that we can look and dig deeper into. We're always available. Reach out to sales if you need anything regarding the platform or subscriptions. Reach out to me and Amir in case you need anything regarding research, account management, or demos. Thank you for attending, and we hope to see you in our future webinars.